The good news is, if you remember, President Trump went ahead and said the EDA companies, so Synopsys and Cadence, couldn't ship to China. And then he just recently reversed that. So the good news is it's happened once, and it potentially could happen again. And it may not be that NVIDIA can ship the Blackwell chips, but again, this is why we're bullish on NVIDIA. The estimates on Wall Street don't have any revenues from China in the models. So if you do get that, that's just upside. And don't forget, the stock is actually trading at a reasonable valuation. It's trading at about a 40 times PE. Remember, the market's at about 24 times, and you've got companies with no growth like Apple, or very minimal growth, growing at 30 times PE. So if you end up with any kind of upside where they can ship a watered down version of the Blackwell chip to China, that's just upside. And so for me, that's not what I'm counting on in the near term, but it'd be great to get it, obviously.
Oh, okay, so this is good to know, right, that the modeling right now does not account for any revenue from China, which is probably a safe way to play it, right? But to your point, a couple of minutes ago, you're talking about, a pull forward demand, et cetera, and a lot of folks, investors, hoping things are going to turn out a certain way. My thinking is this, right? One of NVIDIA's biggest problems, I think, is if they start to ramp production, build up inventory of this chip, the rules, export rules change. The models may not have accounted for any revenue from China, but he's got if he ends up with a whole bunch of chips in inventory on the shelves that he can't sell, that's going to be a huge drag.
Yeah, but you got to remember, he's not going to be ramping up those chips at TSMC until he kind of gets the go-ahead. So I wouldn't worry about that. They already learned their lesson, I think, the first time. Don't forget, the original write-down was $5.5 billion. It got lowered to $4.5 billion because they could, take $1 billion of that inventory and repurpose it for other reasons. So that's not something I would concern myself with because, they're not stupid. They've learned from the first time go around, and so I think they're going to wait until they're darn sure that they've got the go-ahead, and then it'll take about a 90-day cycle time to kind of get it through from beginning to end. And so that's not, if they don't get anything, that's not a downside risk. If they get something, that's the upside, because that means all the numbers are going to go up. This is not like last year when I was saying be careful, and then you got a big write-down. This is the other side of it, which is you don't have any China revenues in the numbers. And so now it's, if something happens in China, it can only be good if you have zero revenues in the models to begin with.
Okay, I hear you there.
Nvidia recently achieved a significant milestone and is once again the most valuable corporation in the world. It is now the first business to reach a $4 trillion valuation. Let's examine why investors are becoming more enthusiastic about it and why it has the potential to rise. Although Nvidia has been a profitable business for many years, its products have traditionally been targeted at the gaming sector. When ChatGPT debuted in 2022, it instantly became well known, revolutionizing the way people utilize artificial intelligence, AI, and increasing demand for Nvidia's potent graphics processing units, GPUs. That opportunity still exists, and Nvidia is well positioned to keep growing as the market leader whose processors are preferred by the biggest and most significant IT companies in the world. To maintain its position as the market leader, it keeps introducing new, more potent products. Its Hopper product line was replaced by its Blackwell architecture earlier this year, and it recently announced its first collaboration with CoreWeave, a supplier of generative AI cloud services, for its Blackwell Ultra architecture. Pre-orders for the Blackwell Ultra chips are still being accepted for delivery later this year. According to CEO Jensen Huang, AI will keep developing and eventually become a crucial component of IT infrastructure. Its products, which are regarded as the gold standard for AI development, are in high demand. Right now, Nvidia is seeing stronger growth due to the particularly strong possibility in data centers, which are required to fuel generative AI for large language models, LLMs. With the market continuing its own recovery and up over 7% so far this year, optimism may propel Nvidia's stock above $4 trillion. According to the average Wall Street analyst estimate, Nvidia will continue to rise by roughly 8% over the following 12 to 18 months, reaching a peak of 53%. Its prospects in the near future will be determined by the fiscal second quarter results, which will be released on August 27th and cover the period ending July 27th. It should easily rocket higher if it meets or surpasses Wall Street's forecasts as well as its own internal aspirations. With a forward price-to-earnings ratio of 28, Nvidia stock appears to be well valued given its potential for growth. It might regress if it misses earnings or releases any other unsatisfactory information. Wall Street expects $1 in earnings per share in the second quarter, up from $0.68 last year, and management expects revenue to rise by around 50% to $45 billion. But whether it's $4 trillion or not, investors should be impressed by the long-term potential. Nvidia continues to go forward despite a number of obstacles this year alone, including increased competitors and laws that hurt its China business. Its investments in new and enhanced versions give it a moat, and it currently holds a firm hold on the AI chip market. They still rely on Nvidia for the most powerful computation, but some of the new competitors, like Amazon, are producing their own chips to give customers options. Nvidia will likely play a significant role and continue to generate money for shareholders as AI continues to establish itself as a standard component of company and day-to-day operations. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. Nvidia's stock is soaring once more after a challenging start to the year. The S&P 500 index's 15% gains over the last 3 months were easily surpassed by the semiconductor giant's 42% stock increase. Those who purchased Nvidia stock during its decline in 2025 must be enjoying substantial profits at this time. Nvidia may double in value over the next 3 years, so if you were among those who missed out on its spectacular run, you might still want to buy it now. Let's examine the causes. Citi, an investment bank, recently increased its price objective for Nvidia to $190 per share, noting the company's remarkable potential in sovereign artificial intelligence, AI infrastructure, or AI used by the government. According to Citi analysts, Nvidia is already generating billions of dollars in income by 2025 as a result of the demand for autonomous AI infrastructure. Crucially, Citi analysts predict that this revenue area will continue to grow since the chip giant is participating in almost all agreements for the development of autonomous AI infrastructure. In order to strengthen digital sovereignty, support economic growth, and position the continent as a leader in the AI industrial revolution, Nvidia's press release stated that it had reached agreements with a number of European countries, including the United Kingdom, France, Italy, and Germany, to use its Blackwell AI graphics processing units, GPUs, to assist them in developing an AI ecosystem. However, Nvidia's independent company is also expanding in the Middle East. The demand for Nvidia's AI accelerators is rising in countries like Saudi Arabia, Qatar, and the United Arab Emirates. Nvidia really notes that it is assisting in the deployment of autonomous AI infrastructure in 5 continents, including Africa, Asia, and South America. It should come as no surprise that Bank of America projects that the market for sovereign AI infrastructure might eventually bring in $50 billion annually. Given its international connections, Nvidia appears to be in a strong position to seize a big portion of this significant opportunity. Therefore, it is simple to understand why Citi predicts that Nvidia's data center revenue would rise by 5% in fiscal 2027 and then by 11% in fiscal 2028. In contrast, it is anticipated that sales of data center networking chips will rise by 27% in the following fiscal year and by 12% in the one that follows. Don't be shocked, though, if this company grows more quickly. After all, Citi projects that by 2028, the total addressable market, TAM, for AI compute chips would be worth $563 billion, with an additional $119 billion coming from AI networking chips. In fiscal 2025, which concluded in February of this year, Nvidia's data center sales reached $115 billion, a remarkable 142% increase over the previous year. It won't be shocking to see Nvidia's data center revenue surpass experts' projections in the future, as the company is the market leader in data center compute and is also becoming more popular in networking chips. Last year, Nvidia was predicted to have 92% of the AI data center GPU market. Based on the $563 billion end market opportunity mentioned above, the company's revenue from sales of AI chips might reach $280 billion even if its market share declines to 50% in the ensuing 3 years. In fiscal 2025, that would more than double the company's data center revenue. Last year, Nvidia made $15 billion from its non-data center operations. The good news is that the firm is seeing robust growth in industries like gaming, which might lead to an increase in its non-data center business as well. However, Nvidia's top line might reach $300 billion even if we assume that its income from non-data center operations increases to $20 billion after 3 years and reaches $280 billion from selling data center processors. The stock of Nvidia is trading at slightly more than 26 times sales. Given that its top line might more than double from the previous year's estimate of $130.5 billion, expanding at a 32% annual rate, it can sustain this premium multiple after 3 years. Because of its supply chain control, Nvidia is unlikely to lose a significant portion of the AI chip market, which is another factor contributing to its ability to maintain a premium value. With a predicted top line of $300 billion and a sales multiple of 26, Nvidia's market value could reach $7.8 trillion, nearly doubling its current value. Because it appears capable of rising sharply, investors can still think about purchasing this AI stock. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.